Good morning. Welcome to Admiral Markets. Welcome to this live webinar here. We're going to take a look at the Forex market at the currencies right here on the 22nd of April. First of all, though, as always, the PowerPoint explaining that this material is intended for a global audience. Please take into account that this may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, trading for exchange in global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Okay, by continuing watching this webinar, you agree with this disclaimer and the content stated here. Okay, thank you for your attention. So, we're back with our trading, of course, as always. I was out for a day on Friday. Took a day off, enjoying the Easter weekend. So I think every so often it's always good to do so. The last break for me was Christmas, in fact. So I think it was high time. I think it's probably good for most Forex traders would actually become, I think, a bit more sharp if you just take a day off every so often, because otherwise it does require quite a lot of attention, a lot of focus. So relaxing that for a second and stepping back and enjoying the sun sometimes helps actually the trading in the long run, right? You have to remember, we have to keep that balance regarding not only our account but also our mental capital, so that we stay focused. If we're not focused, then we can't implement our trading plan well. So I enjoyed that, of course, and I hope you did too. We're going to take a look today at the Camarilla and intraday trading. Using this checklist prior to any decisions is always good. That keeps us from avoiding making impulsive, emotional decisions. Emotional decisions usually in the long run and in the intermediate run, they don't add to the profitability. If anything, they cause us to make mistakes with the execution of our plans. So it's always good to have a checklist before entering and a checklist after entering, so that we know that we're properly implementing our trade management plan as well. Those things could include, but are not limited to, the trend, opportunity, filters, trigger, and entry method. So we're going to take a look at Camarilla today. Specifically, before we actually start looking at the charts, let me share with you some links here. Hang on. Here we go. If I can get this to work, 1 second. Doesn't seem to be responding as yet. Try it again, or let me change the date. Not sure why it's not working. Coco, normally the time that we start is 8:45, by the way, or 7:45 GMT, by the way. I just saw your chats now. In fact, didn't see them prior to that. Not sure why not, but anyhow, let's forget this. I'll just take a look what's going on and let you know. In the meantime, though, I can show you, before we start, our schedule of this week. Yesterday, Nanette had the weekly FX recap, and today, of course, Camarilla. Tomorrow we have reversal trading, and Nanette has introduction to Akinashi candlesticks, Thursday trading psychology, and all you need to know is stop losses. All right, so today we have nothing that important, I think, within our London session. Only in the afternoon, European afternoon, we have USD existing home sales. Okay, so that's for your info there. And with that said, sorry for that delay here. I'm just trying to open the question box, which has a bit of a unusual. Sorry about that. Can't see your questions all too well. I moved something and it's all these boxes look a bit strange. When we will finish, I can just barely read it. We will finish roughly 1 hour and 20 minutes from now, something like that. Tomorrow we have a live trading room indeed as well, and Thursday, all 3 sessions for those of you who are new in here, 3 times a week, Tuesday, Wednesday, Thursdays, same time, same place. None of had problems this night. Okay, that's annoying indeed. Hopefully his computer is running again. Let's see. So let's move over to take a look at these charts together. What's going on the euro, for instance? So today I'm back in action. Yesterday I also was not really actively trading because of Easter, second Easter day. I didn't want to trade with thin volume like that expected. The trading room was Tuesday, Wednesday, Thursday, by the way, not Monday and Friday. And so this is my first day back, looking actively at the charts at least, and seemingly nothing really happened. Nothing much changed, as we can see. Same old situation as Thursday. I would say we attempted to make an upside, but we didn't get followed through, and we got a rejection down again. And we are expanding this correction, expanding this retracement, and this correction to the sideways here. So we are at the 50 fib. Could we make it to 61.8? That's the question at the moment. We're hanging still at that fib. I wouldn't consider that fib broken. Still a bouncing spot, and you can see price is reacting to that bouncing spot as we speak. We have potentially here a strong bullish price action signal as we're looking at this live. And if you put a trend line like this, a trend line like that, the break of that trend line could indicate the continuation of this euro-dollar upside. All right, it would be a 50 fib bounce, which would not be too untypical in a way. So if you're looking at this 4-hour perspective, you can see why we're looking for upside. You can see this is on the daily chart an uptrend. The weekly chart is still a retracement. So there could be, as we move up, some levels that we certainly have to be aware of that could act as a turning spot for more downside until we get to those levels like 139.70, 140, and maybe 143 even. This is a daily uptrend, and therefore would expect uptrend continuation. Unless we break out of that uptrend, same story, we're not looking for that change as yet. As long as we stay above, let me make this a blue line, above this blue line, I'm bullish. Okay, we broke out of magenta. The first magenta with a good momentum, now hooking back to the 50 fib, that looks like a bouncing spot from our upside. So if you like that bounce, basically you can let this hourly candle finish in 6 minutes. You could take a retracement of that candle, and well, a tight stop loss would be below the current hourly low. That's a very tight stop loss. Could work though. The other one would be a Elusive stop loss below the 61.8 at around, but that's already widening the stop loss just a bit, but that's okay. It's only about 30 pips lower, down to about 137.43 for instance. That's another option. Okay, so that's less risky, but of course the stop loss is bigger as well. All right. So with that said, I think that tight one could have its potential, and because we are, especially if we see this bullishly candle building, you know, that could be a pretty strong hourly pin bar, or you know, price action signal, candlestick pattern signal here of bullishness. So cocoa is 138.02. If you're in a short, could be worth indeed, depending on, of course, on your plan. I don't know exactly your trading plan. You don't know your trading management plan, so I don't want to discourage you from following that. I would primarily suggest to follow what your plan is. If your plan is, let's say, open and loose for interpretation, then maybe a retracement of this wick could be indeed potential for you to exit with not that big of a not that many pips lost, for instance, depending on where you have your stop loss, etc. That's difficult for me to say. But we'll have to wait. We still have 4 minutes before this candle closes. We seemingly are still in this downside though, because we haven't broken out of the magenta trend line. So that's something we have to be aware of, that although it looks, maybe the price action here looks bullish, we could hit this trend line and make one more downside to 61.8. I wouldn't rule that out as yet. It's still a resistance, and therefore that's a scenario that we have to take into account as well. And that's why the real potential for this particular upside is above magenta. Upon the break, hook back and go. And then a stop loss below this level is okay. Now it's a bit early though. It's a bit tight because, as I said, we can make to the upside, hit that trend line, move down to the 61.8, and then the stop loss below the bottom is tight. If we break magenta, hook back and continue, then that changes the story. All right, so I hope that's clear. Let's take a look at the weekly here. Last week we had an inside candle. It was a very small candle, in fact. The size was barely 200 pips, I believe, if I remember correctly at the top of my head. So it was really not worth the the trading because it hardly moved. That sometimes can happen, I guess, maybe because of the holidays, upcoming holidays last week. Whatever reason it was, if you look at the candlestick formation, it's the inside candle. Last week's high didn't break the high and it didn't break the low. That means it's entirely inside the bullish candle. So what do we have? We had about 6 weeks upside, 1, 2, 3, 4, 5, 6 weeks upside, 3 weeks down. That went about to the 61.8 fib or 50 fib. Bullish engulfing twins, inside candle. So from a weekly perspective, upside seems likely if you look at this. Also here you can see that uptrend in motion. Will that mean that we continue this week? We don't know, but definitely the bullish candle and the small inside candle are clear, and moving averages are aligned for upside. Daily chart. Daily chart, break of magenta, hook back, we talked about it already. Yesterday's high is something that could be nicely broken before a hook back for more upside. This particular upside trade is probably something more for tomorrow though. If you're looking to trade it earlier, then you know, we have to be on the lower time frame. Not on this daily. The daily, we need a break of yesterday's high, a hook back and go. 4-hour chart. You can see we have to be careful of the potential for this to be an ascending wedge as well, because we've got a flat bottom roughly here with tops like this. So we can keep an eye on both the lines, the bottom and the top line, the resistance and the support line. Break of support, as I said, targets 61.8, and then we should expect a bounce there. A break of the resistance, we can see continuation up to the minus 272 target at 139.70. So I think that's really the most important things have been discussed. Let's take a look now at the 15 and take a look at the Camarilla. So for me, despite the fact that this webinar is focused on intraday trading, as you can see, I still want to take a look at the bigger 1 hour, 4-hour picture, just to understand what direction, what momentum, what long-term indications we can find prior to really zooming into the 15. I mean, there's nothing wrong with the 15. It's just that we'd like to see that extra information prior to looking at lower time frames. Now we can take a look at the 15. We can see I bounced off the L3 here, and right at the H3, Camarilla being well respected on both sides, the H3 to the pip here even, and the pivot to Confluence. So I would say it's still a bit early in the game. Let's take a look at the hourly. We're tracing last hour's bullish candle. I think it's still early. I mean, it is possible to see a retracement of this upside and a bounce. I'd rather wait for more confirmation. I'd rather wait for Magenta to break it, hook back, and go. That doesn't even have to be tomorrow. I can see that if you look at price action, it's pretty close to that resistance line. All it needs is upside throughout European session, a hook back prior to New York, and a bounce in New York. That probably would be the better trade, I would say. Off of the H4 up to H5 in R2, for instance, right there. That seems to be the sweet spot, the sweet zone here, I would say, for today. Not now, but later today. Right here, it's still a bit early. It could be worth the risk. I'd rather wait for more confirmation, personally. I like confirmation. And downside, not that interesting, unless we break L3 down to the 61.8 fib. Other than that, this seems to be one correction, a wave. This is another. This could be the second here. We have to find out how far this leg can continue. Is that indeed the end here? Or will we see one more correction? Could be the end, but this is a bit on the early side to assume that. Could be worth it though, because the reward to risk is better, but waiting for confirmation makes that potential for a breakup higher. What kind of confirmation am I looking for? Basically, what I would be looking for is a break of the Magenta trend line here and the H4. Sorry if that wasn't clear. That's what I'm looking for to break. I want clear price above it, preferably 1 or 2 or 3 candles above it, at least 15-minute candles I'm talking about, and then a hook back to it and a bounce, thereby capitalizing on the space between H4 and R1 and H5. So depends how you want to trade it. You can trade the bounce indeed at the trend line, for instance, or you could wait for the confirmation, which is, for instance, a 50-minute fractal that is here, and a break of that fractal. Pullback is a potential indeed, but you can also wait for the first 50-minute fractal or 5-minute fractal resistance spot to break. That would be trading the continuation. Depending on how you trade it, you might want to wait for some 50-minute candlestick pattern as a confirmation, for instance, because just because we broke and hooked back doesn't mean we're going to bounce. It could, doesn't have to be. So it depends how much a trader likes this potential for the bounce. If you like that potential a lot, considering the current structure, then taking the bounce, immediate bounce, could make sense. If you want a bit more confirmation that we all bounce, candlestick patterns or break of fractals are then better. So that's always the question. In this case, it depends. I think the euro dollar is pretty good structure. We'll have to see how it develops exactly, but especially if we get a good impulse and we get a slow grinding move down like this, like that, then there's a better chance of getting continuation up. If that happens, buying the pullback makes sense. If we get a break with a pretty fast downside, then I wouldn't be looking for it. I would definitely want to see a bull flag if I'm trading the pullback. And if you like that pullback and you don't mind taking pullbacks, that could be an option for you. Or if you don't like pullbacks, because some traders don't like buying on the retracements, some traders rather wait for the second confirmation, then look for fractals, for instance, on the 15 or 5-minute chart. Look for the break of those, and that would be the breakout after the breakout, the second breakout. That's another way of doing that. But especially if the price action is slow, and these oscillators going back to the zero line after a good momentum up, then that has a better or decent quality in it to trade the pullback. Alrighty, let's see. Let's go to the pound dollar. Pound moving up as well. Same bullish price action signal. I'm personally a bit cautious of the pound because there's 4-hour divergence, so I'm not totally fan of this pound dollar. It's a bit different than the euro dollar. Let me take a look at the 4-hour. You see, there's no divergence on the euro dollar. The pound dollar does. The pound dollar, when looking at these tops on the 4-hour here, when you connect the price highs with the oscillator highs, obviously the oscillator has a higher low, lower high, sorry, and price has a higher high. Right? So that's something concerning to me, and therefore less interested in the pound dollar straight off the bat. Not to say that the upside is totally out of play, it's totally out in the fridge. Definitely could happen, but I'd rather wait for either the retracement to occur, which would be perfect if we get a retracement back to the intermediate moving average, which is the target of the divergence, as we know, or as our regular viewers know. And that's fine if that happens. If it doesn't happen, I would be a bit leery about or careful, cautious about this pound dollar. It would have to, well, at the moment, it would really have to clear the top very nicely. All right, so otherwise I would not be interested. If it doesn't clear this top with sufficient power, then I wouldn't be looking to trade it because of the divergence. It's still there, it's still present. We haven't made a big retracement as yet. This is just a part of the retracement potentially before we get one more downside. If we put a fib on this first leg down here, you can see we stopped at the 61.8. We could stop at any of these fibs and move down to back to support. That could be still a bouncing spot though. So until that happens, I'm really not interested in this pound dollar. There's a lot of divergence here in the hourly as well. Same story. A lot of oscillators that I don't have on this chart are showing oversold positions as well, which is making me concerned about uptrend continuation. If we do push above 168.40, then I guess we'll get double divergence potentially. So eventually I would expect this bigger correction to happen. Now the upside might be in play still up to at least 170 potentially. That's where we see a bigger weekly resistance kick in. So it's possible to see some upside above 168.40 up to 170, those 150 pips there. It would be tradable if we break above it, then make a decent pullback and continue. That's fine. Otherwise, I'm very cautious. What else? Let me take a look at the weekly. See, the resistance on the weekly chart is right here at 168.20. We really didn't clear that level as yet, so want to be careful. We have two smaller wicks, but not major wicks there. Daily chart, intraday tried to break through that 168.20, but didn't manage. Only have a wick there and a big pin bar. Four-hour chart, we talked about that. 1 hour chart is showing bullish price action though, and out to the 15 before we move on to the new pair. We're right at H4 and R1 Confluence. No, I wouldn't be interested in upside. Nope. How about downside? Maybe if we get that low, it's pretty far from here. So that could make more sense, but that's pretty far. Not interested in upside Coco because, as I said, as I explained, the 4-hour chart is showing divergence, and on the oscillators I see a lot of oversold levels. Not only on one, but a lot of them. So that's making me a bit leery about the pound dollar. But in general, there seems to be dollar weakness. So that's probably the primary reason this pound dollar is moving up as well. And we never know, right? Despite this divergence, we could get double divergence, and it could take longer than we think. So that's why I wouldn't short it here either, personally. No. But I'm not a reversal trader, so you have to understand that I'm not really a trader that would trade upon it. I would be more using this info not to trade it, and not to trade with the trend, because the trend is up. That's clear, right? There's no doubt about that. Price is making higher highs, higher lows. This is a small correction so far, and it could be a retracement from upside. But because of the divergence, I'm careful. I would like to see either a bigger pullback here, or for upside, or we break and then make the pullback. If we continue really far up to 169, for instance, without making a pullback, and we make some bull flag, then maybe one more upside is possible. I'll take a look at that when it happens. If you want to trade reversal trade, I mean, it could make sense. It's R1, it's H4 with the stop loss above this top maybe. Yeah, could make sense from a reversal perspective. But the momentum is up, so all you can catch maybe is a small downside like this, back to moving averages, and you can see one more bounce up, for instance. That's always the danger of reversals. They might not go as far as one plans. Especially now because the euro pound is still inching downwards, as we can see here. That means more euro weakness than pound, and that means that if both the euro and pound are going up, that the pound is momentarily going up faster. I don't know. So I'll be cautious with that. Personally, I wouldn't trade it. But I wouldn't trade the pound to the upside either at the moment. Audio USD is moving up. That's more interesting in my opinion. Any dips to the downside makes sense to me. That looks more interesting because we're breaking out of this resistance right here. Even if you have the trend line like this, both lines, no, that's not even possible. All lines here to the downside have been broken. That means that this retracement has been completed. As I said on Thursday, I personally would be looking for Aussie strength this week. And it seems that the week has started with that. Why was that? Let's take a look at the weekly. Here we have weekly bullish candles in this upside. And last week was the inside candle. The week before was bullish. So this week we could see upside continuation of this weekly chart. As a minimum target, we could look at price going back to these Fibonacci retracement levels, back to the 78.6, 886 over the top. So there seems to be plenty of space here to the upside. Right? So we have a weekly momentum up, plus plenty of space to the targets. That's what I like about it. And if we look at the daily, what do we see here? Uptrend in play. We see price making a small bull flag, and now breaking that bull flag, and breaking yesterday's high, and also this 4-hour trend line, plus moving and breaking above the moving averages. So to me, that looks like a bullish formation here. We had kind of a falling wedge like this as well within this up momentum uptrend on the 4-hour chart. We almost went back to the 4-hour intermediate moving average here. And then we had a clear 4-hour candle above that trend line. The trend line had 4 hits on it, a good angle, making it a nice trend line, a nice characteristics of that trend line. Why? Because it has several hits, it has a good angle, it's an uptrend, and we're breaking above it. We have a good 4-hour candle above it, 4-hour candle totally outside of that trend line, thereby breaking that trend line. We have a candle close that is near the high as well, indicating that a decent amount of bullishness was controlling that 4-hour candle and kept relatively in control in that candle. And this 4-hour candle, we're seeing the continuation of that upside. So for me, this is looking interesting. Personally, I'm already in the long, but if you're not, from this morning, if you're not, then I would be looking for a retracement here for upside. Okay, because we have an uptrend, the weekly, daily, 4-hour, all indicating that. Once again, weekly, we had those weekly candles. The daily, we still have space up to this fib. Four-hour chart, definitely an uptrend here with a slow correction here to the downside. All right, this is the bullish weekly candle we were looking at 2 weeks ago. This is the small inside candle that we were looking at last week. And if you look at the hourly and just put a fib on this last swing high, swing low, price stopped at the, well, it's close to the 61.8. Depends where you put it. If you put it on this swing high, swing low, no, that's the wrong one. Oh, anyhow, I don't remember. I thought I was using a different one. Maybe it was this one. I don't remember. But in any case, we just missed the 61.8. That's a pity. Probably, maybe I was using this one. Doesn't matter. Well, anyhow, point is that we made a pretty deep retracement here, and we're bouncing off these fibs at least. Didn't get quite to the 61.8, missed it by 10 pips, but that can sometimes happen. And now we're breaking out of that. So looking for the hook back. Let's take a look at the 50-minute chart. We are already above R2 and H5, which means from an intraday perspective, when looking at Camarilla, we already hit the target. So either you were trading it during the Asian session or beginning of the European maybe even, but otherwise it already blasted away and went to targets. Doesn't mean, though, we cannot get a retracement back to, for instance, the H3 and bounce off that level. We can put a fib on this entire upside. And we're looking for, let's see, anything of a fib, 38.2, 50, any of these fibs could be the bouncing spot. Now, does it have to turn right here, right now? Doesn't have to right away. It could still inch up forward. But would it be worth a long here? No, not in my opinion. Moved too much already. We have a bearish candlestick here. I would expect a retracement. I mean, could it still break this top by a few pips? Certainly it could. Would I want to trade it? No. I would rather wait for a retracement back to one of these fibs here. But preferably, obviously, not the 23.6, but a bit too shallow. But preferably the deeper ones here, of course, 50 or lower. So to me, odd USD upside is looking interesting. Kiwi. Kiwi is breaking to the upside too after a deep retracement. Yep, same story here. New Zealand is moving to the upside though, so there seems to be a bit more Aussie strength than New Zealand strength, but it too is breaking this trend line. However, you can see, relatively speaking, that the New Zealand corrected a lot deeper than the Aussie. So my favorite is Aussie because of the odd New Zealand as well. Let's take a look. Still moving up here. There's still the upside momentum. Still bullish candles one after another here, traveling to the upside. So therefore, personally like the Aussie more, but doesn't mean that the New Zealand dollar couldn't and wouldn't move up to the upside together with what we're seeing with the euro and pound and Aussie. But just saying that this is a lot deeper correction. How deep? 78.6 fib. Dollar CAD. Dollar CAD, very careful about the dollar CAD at the moment and the CAD in general, because we had a tremendous fall on the dollar CAD after a break of a triangle. The break of the triangle should have been a breakout to the upside, should have seen follow through to the upside, but didn't. So that spells trouble. That spells a bit of fishy circumstances here. We didn't find any buyers against the CAD. Somehow we found a lot of CAD strength, and there was a very strong plummet here. It's a fall with a lot of momentum. So therefore, this could be a corrective pullback to a 50 or 61 or 38.2 fib for more downside, right? That's just a natural thing. Fall, correction, fall. That's always something that can happen. I read that some traders think that falling is easier for currencies than going up. Well, in this case, if you think so too, then this makes particular sense, because this was an enormous fall, and it fell very easily. So we could see that follow through. Now, looking at the weekly perspective, that downside though was still a retracement. Why? Well, we have higher highs and higher lows in the weekly chart. There's no doubt about that. Certainly. So, in my opinion, it's an uptrend. However, we had already 1, 2, 3, 4 weeks not breaking this high. With 4 weeks not breaking that high, we're getting awfully close to a moment that is indicating the potential end of this uptrend, or at least a bigger retracement potential. This week and next week we'll get more confirmed info on that. However, looking at this perspective, there is a chance to get something at least like this. If not that, then maybe even bigger. Now, I'm not saying the uptrend is out, because after this correction we could see a bounce up at the minus 618. It's possible. By all means, this could be a correction on its own and we get upside. So for the moment, this is looking like a bullish bounce, and we could see probably move up to these retracements. But then I would be cautious, and I would be careful, because there is that potential to go down to the minus 618 and then bounce up off of that level again. The slower this goes to the upside, the more likely this is probably going to be a retracement from a downside. Dollar yen, we'll take a look at that definitely. Chris Svorcik and other yen pairs, we'll take a look at those. At the moment, it's a good question. I would say it's about 50-50. I don't have any preference at the moment. It's just that I want to warn everyone of a potential CAD struggle. Whether the uptrend will win, or we get the reversal, it still remains to be seen. I wouldn't want to favor either of the two at the moment, maybe, but considering the fact that we had a very strong momentum downside, and we're already in the 5th week, I guess we're getting close to the moment that I would start favoring the potential reversal eventually. Especially if this week and next week we don't get a break of this top. But I don't want to underestimate the trend. Far from that. So I'm always careful with that. For the moment, 38.2 is a shallow fib, so we should see more space to the upside to go to a higher Fibonacci retracement level. You can see what kind of fall that was. Similar to this rise. So that always has some potential, at least, of getting followed through. Alrighty. 50-minute chart. Looks like this smaller triangle in here. A break of that triangle is not really that interesting to me. The break of the triangle, no. We got some L4 here, but small space though, only about 10 pips. So there's really not much intraday space here on the dollar CAD. There's just not much movement. There's just not much space within the daily levels. Therefore, it doesn't seem to be that interesting to me from a intraday perspective. From a swing trader perspective, we can see the potential for this dollar CAD to be still an uptrend, but reversal potential hanging in the air. Dollar yen hit the 50 fib of this last downside. I'm personally not interested in any yen pair at the moment. Still not interested. We can see that maybe had a bit of a rising wedge here when looking at these tops and bottoms like that. That rising wedge has been broken. Price hit the 50 fib, broke out of that. Now moving to the downside. Also here we had a strong fall, a slow corrective up to the 50 fib, and we're seeing a lot of bearish price action at the moment. Wick, 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 doji, boom, fall. So that is looking pretty bearish. And who knows, if we look at this daily chart, maybe this is just all correction and we'll see a continuation with one more leg down, for instance. Right? This could be then some kind of bigger correction indicated like the red lines here for more downside. The key level for that particular analysis would be this magenta, this bottom magenta line here, and below that magenta we have space down to the 61.8. Upside, we would really need to break above this blue line here for upside continuation. Let's take a look at 15, see if there's anything interesting. L4 here down to L5 maybe. That too, only 14 pips. There's so very, very, very little space. Also on the dollar yen. Let's see. Coco is saying higher lows. True. True. There are higher highs, but it's just moving very slowly to the downside, to the upside. Coco says rather long than short. I'd rather not do anything at the moment. Although, yeah, I can imagine everyone has their own preferences. That's good, by the way. At the moment, though, I can't really say any of the two. For me, this is looking like a potential. If you look at it from a weekly chart, we definitely had a lot of momentum to the upside. There's no doubt about that. Definitely. But we're not getting any follow through here already for months in a way. This last piece here, the blue box. And it's becoming quite quiet and subdued. This was still a lot of upside. And this was looking like a retracement of the upside for more upside, like that. But we're not getting any follow through with this blue arrow here. And it's just been going sideways. So in that regard, this could be a correction like that for more upside, something like this. It's possible. The only thing is that this is going so slow. And we have quite a strong resistance ahead. The downside is only confirmed to break upon the break of this magenta. Then we have downside potential. For the moment, though, as long as we stay above magenta, this could be an upside with a retrace from upside. But if that were to happen, then we would definitely need to probably see a bit of deeper retracement for that potential to materialize, I would say, or to have a little bit of interest. For instance, the 61.8, you can see at least some space up to blue with a decent reward to risk basque here. That's potential. That's possible. So we'll have to see. Either a break of this magenta for downside, or maybe a bouncing spot for back up to blue. In any case, main direction is sideways for the moment. So I would try to find something that's more trendy mode. Pound yen is trending to the upside because the pound dollar is moving up. So is the dollar yen a bit. as well, so that is actually moving nicer at the moment. However, if you look at the daily chart, we got a resistance close by, and we're right about there. So we're very close to that resistance and the top of the triangle. Couldn't break H3. So let's see. There could be a breakout trade to the upside on the pound yen intraday trade. Break of this H3 and trend line, for instance, from that level up to about H5 could be possible. What I want to see is a decent break of at least this high here. That was yesterday's high. I would need a break of that. I need a break, pull back, and go up to H5. Then it would make sense. Otherwise, I'm still cautious because of that bigger resistance close by. Okay, but if it does break yesterday's high and it does break above H4, makes a hook back and bounce, then that could be a sweet small little trade up to the H5 within the day. Otherwise, not interested in big position trades because of this resistance line coming in very close at about 173, I think. Yep. Aussie yen, same story. Not too interested compared to the Aussie USD because of the yen story here. Maybe the euro odd and pound odd are more interesting. Let's take a look. Also the euro odd here, probably the pound odd too, pound odd as well. All of these Aussies have already moved past their L5 and H5s, but there could still be some good trades, especially the Aussie USD, but maybe also the euro odd and pound odd. Let's take a look. Yeah, it was looking like a rising wedge formation here on the Aussie. Depending how you put those trend lines, but you can put something like this on your trend line. You see that rising wedge formation here, indicated by the blue lines, for instance, with the divergence between the tops and a break of that. So that doesn't come as surprising, I would say. However, there's definitely potential for this pound odd to be retracing back this entire swing high, swing low. In that regard, price just stopped at 23.6 fib and could still have higher fibs above. That's something to be aware of. Doesn't mean, though, that the Aussie couldn't strengthen a bit here before we get the bigger retracement up to the higher retracements. Let's see. For the moment, we broke actually this 4-hour support level here. So we're making a lower low. All we need is a lower high, and that could be enough for the downside to continue. So probably get some upside. We'll have to wait for the level somewhere here to stop. Get a fractal here too. That would be a lower high. As soon as we have that, then there's a higher potential to move down. Probably be some counter trend line as well. Connecting these bottoms, for instance, a break of that trend line would be the confirmation of the pound odd to the downside. Yeah, we had a trend line right here, just like the odd USD. This morning, this happened probably yesterday. Yep. It's hourly. Let me get rid of this trend line here. Yeah, there seems to be a lot of momentum here to the downside. The euro, of course, losing against the pound, so therefore probably also losing more against the odd than the pound. Pound odd is not moving as fast as the euro odd here. Let's take a look at the 15. Yep. Well, that said, the euro odd could be maybe interesting, but the odd USD still a bit better here because of the euro dollar. Euro dollar is moving up. That means there's more dollar weakness than euro weakness. That means if we had to choose between the euro odd and odd USD, the moment the odd USD is better. If we looked at the remember, if we look at the 1 hour chart, we see bullish price action, candlestick pattern. So therefore, I still like the odd USD the most, ironically enough, more than euro, just because of the euro dollar at the moment, showing more strength than euro dollar than weakness. Therefore, the euro odd, although it's making downside, has the potential to make less downside than the odd USD does with the upside. Now, just like the dollar CAD, I'm very careful with the euro CAD as well at the moment, and the pound CAD, personally, just because of the fact that we've made clear 5 waves to the downside for those that like edited waves, or even for those who don't. You don't have to be an edited wave mathematician here, or magician, or anything of the sort to see 5 waves. It's very clear: 1, 2, 3, 4, 5. Right? If you can see that, that's already you already at least have some good info there, because sometimes this is very clear to see. And if it's very clear to see, you might as well use it, right? So that's clear 5 waves, in my opinion. So that's most likely, although you never 100%, part of a bigger correction. So that's why I would say that also the EuroCAD, just like the dollar CAD, is showing some reversal signals. And we'll have to see if that, of course, pans out. But if you look at the weekly chart, we got 1, 2, 3, 4, 5th week again, just like the dollar CAD. And yes, we're in an uptrend because you can see prices above those moving averages. Yes, we do have a recording, but it will take, as far as I know, it will take some time before it's uploaded. Let's see. And I missed your comment there about the double top. Sorry about that, Coco. That's probably about the euro odd. Let me take a look. So yes, we do have a recording, but it will take unfortunately, some time before we have it up. So yes, you can look at it, but it's going to take a couple of days, I believe it takes, before it's really uploaded. So we have to see if that's within your, I don't know if it makes sense still to wait that long. But we'll be finishing soon, by the way, about 20 minutes I would say we have left. So not sure if it's up to you, of course, how you feel, but we don't have much things to go through as yet. So looking at this Euro CAD, it is looking the same structure as the dollar CAD. And we'll have to see how far this retracement can go up. So with that said, we could see potential at the 50 to the 61.78.6. So there is some potential to go up to those levels, just like the dollar CAD does have that as well. All right. But then again, if we look at this pattern, I'm not too big of a fan of buying it either, if I look at the structure. So I would rather wait for a bit more confirmation, either of a turn at these fibs, otherwise just waiting, because I don't like both sides at the moment. I like the downside, but would need more confirmation 1 or 2 weeks from now. And the upside seems risky. We had a lot of divergence here between these tops. Pound CAD basically the same story. Euro New Zealand is gaining some strength. New Zealand is gaining some strength, sorry. Now getting some weakness here. Primarily the Aussie is still my favorite at the moment. Pretty choppy price action. Let's take a look at this very first reversal. All right, on this pound New Zealand. What do we see here? Price just hit the minus 272. Now has the potential to go up to the minus 618, right? So if anything, maybe a bit more weakness on New Zealand. Let's take a look at the 50-minute chart. Let's see, we have yesterday's high coming in about 196.22. Sorry, 196.32. Yeah, I want a break of that, plus the break of this R1 and H4, and there could be that trade up to in between the minus 272 and the minus 618 target here. At least this space right there. Downside would need a break of this bottom between L4 and A5. Could be potentially interesting indeed. CAD2 still has majorly oversold situations here going on, so we'd be careful with that. Here too, the CAD, like the Euro CAD and Pound CAD, all showing potential struggle here with CAD weakness continuations. If you look at the oscillators, a lot of over strength here from the over weakness. The CAD short level, let's take a look. $102.50. Now, today's intraday trading, CAD definitely having upside momentum for the moment. So I would be cautious with trading the divergence as yet. Also, don't forget that even though we have divergence, every time it makes a downside, it's still finding buyers. Right? The CAD is not ready yet, as we can see, but it could be soon. It's still finding buyers. Every time it makes dips, it's still finding buyers. But it's not moving up too much. So this is a rising wedge on the CAD, and therefore be cautious. 102.50 is the breakout not only of the L4, sorry, the what did I say? L4? No, I mean the L3 and L4, but also this rising wedge. Ultimately, though, the CAD will roughly follow the $CAD, Euro CAD, Pound CAD, so I have to wait maybe a bit more before we get those potential reversals. If I look at the other pairs, then maybe a reversal seems a bit more likely than the trend continuation at the moment. But that's because all of them are showing the same: the Pound CAD, Euro CAD, CAD, CAD. But it could be a slow hunting because the whole turnaround of a reversal takes time. It doesn't come that easy, especially after a good trend like that. So you could get more pushes than expected. Odd is either moving up, we're pretty close to resistance. We don't want to trade that close to resistance. Odd Swissy breaking to the upside. New Zealand Swissy 2. CAD Swissy 2. Pound Swissy 2. Euro Swissy too. Seems to be a bit of a Swiss, maybe some Swiss franc weakness. Gold still inching forward, downward I should say actually, to support. That's about it. I don't see very interesting with the trend trades. Maybe Aussie Swissy could be interesting, just like the AUD USD. The Swiss franc seemingly getting some follow through as well of weakness. Aussie definitely finding its strength against the USD, even against the yen. So maybe this AUD Swissy would just have the same particular potential. This is the 4-hour chart. We can see uptrend prior to it. Then this magenta indicating a big corrective wedge. And a break of this this wedge now happening as we speak. Let's take a look at the 15. Oh, I don't have the Camarilla here. 1 second. Well, we have an H5 pretty close by. Yeah, that the Aussie. The only thing with the Aussie today is that it already has traveled tremendously amount. So I like the Aussie. That's just a bit of a practical difficulty because it just traveled already so much that we might not see some good follow through till tomorrow, just because it already reached this one of its outer limits here. Not to say it couldn't continue, but it has done already a pretty good job of moving, so that's the only practical disadvantage of that. But if we do look at this 4-hour chart, then basically we fibbed this last breakout here from swing high, swing low to swing high, from swing low to swing high. Then a hook back to the broken trend line at the 78.6 or the 61.8 or the 50 fib are likely bouncing spots for more upside, also on this AUD Swissy. You can take a look at the dollar Swissy. Yeah, still inching away higher and higher. Very slow price action though, not too interesting here. The dollar still getting a rejection, still getting an inside candle. That could be 1 or 2 hours. Once again, this is, although it's a bullish price action, it's still early. Have to be careful of that. Pound dollar getting some rejection off of that H4. Did push a bit higher though. Pushed about only about 4 pips, not much, before we found the bigger rejection here. The AUD USD making that retracement, and I think that AUD Swissy and AUD USD looking the best to me. Bounces at support, such as the 61.8 here at about 933, 93.35, looking the best to me. Let's take a look at gold one more time. Let's see. XAU USD. Coco saying 1331. 1331. Let's take a look. 1331. Right back to the top. Yeah. Possible. It's definitely at support still. So we'll have to see how price responds to that support level. I mean, a bounce here would definitely be possible. That makes sense. pretty tight range at the moment. This was a slow upside, pretty fast fall, but then again slow down. All in all here, relatively sideways, with its ups and downs though. We'll get rid of these lines. Now, I'm not a big fan of this XAUSD at the moment, but if it does break this support, then we could probably see more downside to test the bigger bottoms. Let's see, Coco is saying it's difficult for me to read because of this way that I by accident hit the chat Skype. I don't know why. Not Skype, the chat box. It could be a double bottom. Let's see. It could be, let's see, happened. It could not break. Oh, what happened? It could not break. It's trying to break. It still could break. It's trying to push. And if you look at the daily candle, it's posting here a lower low slightly. This one, this level, yeah, 127, this bottom here. Yeah, it's true. Okay, it's making some kind of wedge. We need a break of that wedge. For more direction indeed. Now if it breaks to the downside, we could see some potential to fall, these red boxes. If it doesn't, it breaks to the upside, then we see some potential for upside obviously too. This blue line is not important anymore that much, but we could see upside to retest the top, and then up to that top, and then up to maybe the next resistances. So yeah, break of 1277 and 1331 would indicate that. Until then, I wouldn't touch it because it's very close to the bottom, and therefore wouldn't short into it, but wouldn't look for the bounce either, personally, because of the bigger momentum to the downside. What bigger momentum? I mean this. Big fall, slow upside, fall, so that seems risky. There is support, therefore wouldn't want to go short, but therefore also, because of that momentum, wouldn't want to take it to the upside. Therefore, just waiting. Along anywhere at above the support could make sense. I'm not saying, and has its merits. You just have to be aware that it could break and go through that level. That's all. But if you take sufficient risk, then a bounce trade is always possible. I mean, not sufficient. I mean, if you maximize your risk. Sorry. I mean, if you not maximize. I mean, if you limit your risk. Sorry. Using the wrong words here. But to me, it would be a bit risky. It's not one I would like personally because it's too. I don't know. It's definitely potential bounce, but how much of a bounce? It looks pretty much a lot of momentum to the downside at the moment. So that doesn't seem too appealing to myself. Well, folks. Yep, see you soon, Bob. We looked at all of them, I think, and to me, CAD reversal, something that could be in the air, and would keep an eye on that this week and next week. Not trading it immediately, but definitely something that I have in my mind. Aussie's strength seems to be, as I thought last week, seems to be at the moment indeed pulling through against the USD primarily, and the Swiss franc seems to be interesting to me. New Zealand is also showing some strength, but because how New Zealand is moving up, not as much as the Aussie. The yen is quite a complicated case and is just a lot of choppiness. Maybe the pound yen, small trade to the upside, maybe. The euro dollar, pound dollar, don't trust the pound dollar personally as yet. Euro dollar upside could have potential. And what else? Euro odd and pound odd. Yes, Aussie strength looks good, but against the euro and pound, a bit shaky because of divergence, and I would expect maybe a bigger correction, just like the euro New Zealand, pound New Zealand. So those look like more retracements, and I think that's it. So that's how I see it myself from right now, from this morning. Of course, by all means, take a look at this Camarilla to keep an eye on potential breakouts and bounce trades. That's a great tool. If you ever needed that tool, let me know, and I'll send you that through an email, this particular indicator that you can use for trading. The Camarilla is a great intraday tool, so today's focus was supposed to be most on the Camarilla. I hope that I managed to do that, although we sidetracked a bit with the long term as well. But Camarilla is great for intraday, so if you wanted that indicator, let me know through email. I'll just give you my email. Send me an email, and I'll send that to you. If you have questions, let me know. Otherwise, we'll wrap it up for today, as I've already shared my particular views now. Just give me a second. I will share with you my email address. There it is. No, not yet. There it is. Yes, definitely. Just send me an email, and I'll send that to you. This is the Camarilla pivot point indicator, and you can use it to for your benefit to keep track on ideas that we bounced off in this room. If you have any ideas about what you want to look at tomorrow, so by all means, let me know during the webinar. You can always ask questions. You don't have to wait to the end. But if you have any questions, let me know now. Great, James. And Coco, happy that that you will enjoy that indicator. So just send me an email, though, so I know where to send it to. All in all, not looking that. I mean, I don't see many great opportunities as yet, personally. Maybe that could change throughout the day. But primarily the Aussie seems to be, I would say, most interesting in the sense that it's with the trend and getting some follow through. Let's see. Not sure what you mean, James, but I'll definitely send you the indicator. Also, what you need to know is that basically L3 and H3 are just like range levels, and when you get to H4 and L4, that's when you can expect breakouts. Okay, that's the basic interpretation of that indicator. Euro dollar is finding some buying pressure. Last hour had a wick here after retracing the bullish. Looks bullish price action signal. It's just that it is in a downtrend and therefore could have some struggle still with the rebounding. It could be a rebound. I'd rather wait for more confirmation. I am more of a confirmation trader. I'd rather let the market and price action prove itself to me than me proving my analysis correct to the market. So I don't mind waiting for a bit more confirmation. And I'd rather wait for the H4 break. If the market is going to go up, if the euro dollar is going to go up, it will get to the H4. Let's see, James, we do have recordings of webinars. Unfortunately, they do take a couple of, I would say 3 days, if I remember correctly, 2 to 3 days before they're uploaded. If you would rather have that faster, then I would suggest to contact support. And let me know if they wrote back to you, okay? If there are more of you that would rather have the webinar quicker uploaded, then let me know, okay? But at the moment, that's the usual. So let me know if that's okay, or if you want it faster, let me know, and I will try to see if it's possible to do faster. I'm not sure if it's possible. Okay, great. Cool. Great stuff. So, well, I guess I don't see any further questions, so thank you everyone for joining us today. And looking forward to see you tomorrow. We'll be taking a look at what happened today, what the trade's potentials were throughout the day, and what the new analysis will be, of course, on Wednesday. So once again, thanks for sharing your time with me, and wish you all many pips and happy trading. Cheers.